right, so we're going to talk about a better map to funding. But before we do that, I'm just going to introduce myself and my son Logan. So we're Ivy Business Capital. I've been in commercial credit and collections, trade credit for over 20 years. And throughout that time, I recognized that there were a lot of businesses ending up in my collection agency for collections that really I felt if they had some education towards where to get capital and the right type of capital, that maybe they wouldn't end up in collections. So I saw an opportunity here to help out a lot of businesses. So collections is kind of the dark side of trade credit, and then the funding aspect is more of the lighter side, or the right side of commercial trade credit and commercial credit. So we've kind of built what I feel is a better map to funding. So your typical business owner is typically when they go to get funding, they're going to go to their local bank. That's who they have a relationship with. Despite what their reason is for the funding, they're going to go to their bank. And where that can become a problem is that the typical bank here, they only have a couple of options, right? They may have a term loan, they may have a line of credit that a lot of people don't qualify for. Everybody wants the coveted line of credit, but they're really trying to fit a round peg into a square hole. Most businesses can't qualify for funding at the bank. The banks reject a lot of the applications because they don't fit their particular box of who they want to lend to. There's a whole marketplace of lenders and alternative banks out there, equipment financiers, that you can access. And we're going to talk about that here in a little bit. But when you go to a bank, you're only able to access one unique credit box and what their particular lending offer is. And every bank denial lessens your chance, or your chances of a future approval, right? There's little to no hand holding or coaching to help you qualify. Many of the own banks lending officers don't even know their underwriting procedures and what they're actually looking for, and they don't know how to get these people qualified within their own bank because the underwriters don't share that with them. And so they just go down a checklist. They don't help you build a map to get the business funding that you need. And as I said earlier, the more denials that you get, the more desperate you look to future funding options and what's really out there. And then, so a lot of times these folks will, they don't qualify. And so what happens is they get what's called an MCA, or a merchant cash advance. Some people might see them as a push button loan. You see them offered by Square, by QuickBooks, by, there's a whole different line of lenders out there that are doing these MCA revenue-based funding options, which really, they're essentially a payday loan for businesses. And many businesses get stuck in this program and they never get out, right? Many businesses see this as fast capital, but they don't understand the drain this is, or the drain this has on their cash flow, and how it really affects the bottom line and what it does to their business. And you can see here, this is kind of an example of what an MCA loan might look like. And obviously they do much larger, but we just wanted to kind of emphasize, you get a $19,000 loan, you only have a 10-month pay period. You've got all these fees, and then you've got a weekly payment for that 10-month period. You're paying $2,600 a month, and what it ends up being is $26,000. So you're funding these things or your business in a very expensive way that doesn't truly help solve a problem. Like I said, they're shorter terms. I mean, some of these MCAs go up into the hundreds of thousands of dollars. And if you're doing that on a 10-month term, it's really not going to help your business and get you to the place where you need to be. So we talk about it being short terms. It's very expensive, the daily and weekly payments that just drain their cash flow and what it does to them. And this is only because these companies really don't know what's out there, right? They don't know what exists in the marketplace and what options are really out there for them. So what there is in the marketplace, you have business lines of credit, you have business term loans, SBA. There are different types of SBA. When it comes to SBA, Typically all the banks have their own underwriting requirements on top of the SBA, so they only loan to certain SBA loans that they know how to do, or right, that fit into their particular credit box. And we talked about the revenue-based financing. There's also invoice factoring, equipment financing, there's PO financing, 0% interest credit cards, which is great for low revenue or startup businesses. And then there's personal term loans that you can also use. Many people don't understand as well that you need to have good personal credit in order to build good business credit, right? A lot of the SBA scores, the scoring that's out there for SBA is called SBSS score, and it takes into account both your personal credit and your business credit. And many people just aren't educated about that, and so they may build business credit, but they don't work on their personal credit, or vice versa. So these questions actually help us determine what's the best option for your business. How long have you been in business? What kind of revenue are you generating? What's actually on your tax return? What is your credit profile, your personal income? The industry that you're in has a lot to do with what banking options or what lending options are out there for you, what states you're in. For instance, it's easier to get a line of credit on the East Coast than it is on the West Coast. Don't ask me why that is. That's just the industry norm. So it's difficult sometimes to get a particular type of funding depending on where your business is located. And then, the last question is, what is the funding actually for? You don't want to go out and purchase a piece of equipment on a line of credit. You want to purchase something like that, a capital expense, on a long-term loan where you have a fixed payment and you can stretch that capital purchase out over a longer period of time. So here at Ivy, we offer all of these types of products. We decided to offer this so that businesses could navigate that marketplace with us in the most efficient manner possible, so that we can check the box on all of these options. And how we do this, we actually do this differently than most. There's no hard credit pull when you initially pre-qualify for us. So we're gonna do a soft pull through our API with Experian. We're gonna use that to do a soft pull. We're gonna look at banks, alternative lenders, creative financing, and we're gonna help to maximize the funding, minimize the timelines, and help you avoid the common pitfalls. So we don't want to hurt your credit just for looking at the options. And we want to look at all of these options together at once so that we can avoid all these common pitfalls and mistakes. We're going to not only look at all the options, but we're going to look at multiple lenders for that particular option. We can pre-qualify and expedite the SBA programs, which if you've ever gotten an SBA loan, you know that this is a long drawn out process. They want every piece of paperwork under the sun, including, even your DNA, your blood type, everything. And it's a very long process, but we have lenders that have helped us to streamline that process and hopefully make it less painful for you. And then we're going to connect you with the custom funding options that actually fit your business and fit your needs as a business owner, so that we can help you get your goals accomplished, whatever that may be. So if you want to see what these options are, what you qualify for, without going through the lengthy bank process and without a hard credit pull, how does this work? How do we do this? Well, the first thing is you're going to click this link right here is specific to the IDA members. And you're going to be taken to this form, and you see that this form here is actually fairly simple, right? There's not a lot that you have to fill out in order to make that happen. Logan has put into the link your guys' specific link for the IDA members. And we're going to go through this process. It's super simple. Once you do that, it's going to give us the soft credit pull so that we can look at it. And you notice there's no Social Security required, no harm to your credit score. Now, if we're not able to match you through your address, we may have to call you and get a little more information for you. And sometimes we do need to get your social over the phone, but the initial form doesn't actually have that. And then what you're going to do after that is you're going to schedule a call for the funding consultation where we're going to talk through your specific situation, what it is that you're wanting to use the funds for, and then we're going to build a roadmap with you specifically for your particular needs and how your business grows. I want to mention that the name of our company is Ivy Business Capital for a reason. Obviously, my name is Sven with my Norwegian heritage here. Ivy is the Old Norse word for lifetime. So we're building a lifetime partnership with all of our clients. And some of these clients that come to us initially, they don't even have credit or they don't have business credit. So they don't qualify for a specific type of business loan lending. So we have to get their personal credit fixed and in the right place so that they can build business credit. And we consult with you on all of that. We have partners that can fix your credit. We have partners that will help you to build business credit as well. And we can also walk you through some of those scenarios and help you do that. Again, here's the referral link for the IDA members and what we can offer you guys. And I'm going to really open. And then one other thing I want to mention that if you guys have clients that are looking for financing, you need to get them financed. We can set you up as a referral partner as well, and you can share in the revenue that's comes from funded partners that you share your referral link with. So you can actually scan this right here to become a referral partner for Ivy Business Capital and utilize the methods that we do to help your clients get funding. I know a lot of folks on here might sell used equipment. We can actually go up to 250,000 with just an application and bank statements only, and in some cases up to 500,000 with bank statements and application only. And our terms are generally 60 to 72 months, but we can go up to as many months as 84 on equipment. So I want to just kind of open this up for any questions that you might have, Tiffany, about the process, or any of your viewers may have about what we're doing here and why we're different. Are there any questions that you guys might have?
I do have one specifically thinking about our membership base. Um, at what stage should a business consider this type of funding strategy?
Yeah,
Are there any signals that are out there that would cause them to pivot?
yeah. Logan, do you want to handle that?
Yeah, I mean, we can get funding for a wide variety of businesses. We're in one of the only type of funding companies that can actually work with startups if they have no revenue, no collateral, or anything like that, because of a few unique programs we have. But in terms of when the best time to get funding, it's before you need it, because at the point you need it is when, your bank account in the business is going low. Lenders see that your credit utilization might be up and draining your score down, or maybe a late payments hit your credit. And by that time, it's really, really difficult to find you quality business funding. There's almost always funding available if you have strong revenue. But like he was pointing out earlier, a lot of times it's subprime options that are going to have daily or weekly paybacks. And I saw somebody's question in the chat here. So yes, we only do funding for US based companies. Um, so if somebody was brand new in the US, they would probably fit more into that startup category. If it is owned by a US citizen and they have, US United States credit established, there's probably some startup options for them. Yes.
Yeah, we only do capital here in the US. That's our focus. I know you guys have a worldwide membership that I help with collections on the collection side, but as far as the funding is concerned, we're only currently offering funding in the US. So great questions, Michael. And then when you're merging companies, it would depend on if you had an existing company already in the US as well with an established EIN and credit history. So that kind of, there's some options there, but if you're just, immigrating over to the US, you have to establish some sort of credit in order to get any type of funding for sure. Um, but we're more focused on helping people get the funding that they need without breaking their cash flow, or getting the right type of funding, that's best for their end goal in mind, right? So getting the right type, meaning, again, not going out and using a line of credit for a large capital purchase, spreading those payments out over a longer term, preserving your cash flow, and doing it that way rather than just, the wrong way, right? And again, avoiding the pitfall of just going to one bank, trying to fit, a round peg into a square hole, where we can actually look at the entire marketplace and you can take advantage of every single option that's out there on a soft credit pull without damaging your reputation, without looking desperate, and really working with us who can coach you on these types of methods. For instance, we recently had an SBA loan that we were doing right in the middle of a government shutdown. And this gentleman, had he just gone to his normal bank and tried to get this SBA loan, he probably would have gotten denied. And the reason why I say that is his tax returns looked great, but his current P&L was not matching up with the revenue that he was doing on his tax returns, right? And so after a consultation with us, we realized that he had some projects that were coming up. Once he landed those projects, we were able to put those back onto the P&L so that the P&L actually matched what his tax return looked like. And we were actually able to fund him through an SBA product and get him the loan that he needed. But had he gone through a traditional bank, they wouldn't have coached him in that method. He would have not gotten the loan. He would have had another denial on his record, and he would have been stuck not being able to fund these particular projects that he needed the money for, and move forward with his business. So you're actually getting our expertise. You're getting us holding your hand and building this roadmap with you and your business to help you get the right type of funding that you need. Any other questions? No? Okay. Well, I know this was a short presentation. We covered, quite a bit as far as what options are out there. U.S. companies and U.S. Yes. Would this negatively impact the total potential funding opportunity with 2 times EU partners and 1 U.S. citizen when the 2 partners don't yet have a record? So I think what you're asking, Ken, and feel free to go ahead and unmute yourself if you'd like, and you can ask me your question if I don't understand it. But what you're saying is you have a U.S. citizen who's a partner in the business, and then you have 2 EU partners who do not have U.S. citizenship or U.S. credit. Is that correct? Okay. So it would depend on the partnership itself and how much of the business the 2 EU partners own. But as of right now, only the U.S. citizen would be able to get the funding, and they would need to own 51% of the company in order to get some of these products. But if you're the U.S. citizen and you have, let's say, a 680 credit score or higher, you would qualify for some of the startup funding, like the 0% interest credit card stacking, or maybe a startup term loan, depending on, again, how much of the company you own. So your EU partners would have to get their side of the funding from something else. But as far as being in the US and what the US partner would qualify for, it would really depend more on their personal credit and how much of that company they actually own. So hope that answers your question. I appreciate it. And I will be here if anybody needs anything, and we'd be happy to work with all of you guys. So thank you very much for coming on and joining us. I appreciate your time, and take care and have a great day.
Right. Thank you, Sven.
No problem.